What is going on, everybody, and welcome on into the stream. Today we're going to be diving into the market close, the last 2 hours or so of the market being open and into the close. So I got FinViz pulled up. We'll talk about some of this because it's a little bit interesting, and then we'll dive into kind of what's going on. We'll talk about a bunch of stocks like we usually do and all that good stuff. So the purpose of looking at FinViz first is because I wanted to kind of get a feel for what's going on under the surface, and I think it's pretty helpful to do. But what I think is the biggest key, or the biggest piece of information that we can take away from today's price action so far, is a lot less volatile, and it's a melt up as of now. That could change into the last 2 hours here, but it's been a melt up. And so what you kind of see, it's kind of a situation where you had a lot of people heavily positioned in puts to finish off last week. And the backside of that is, or not the backside, but the opposite side here is that when everyone goes one way, usually doesn't work out that way. And so you're kind of seeing that a lot of people positioned in puts potentially just kind of slowly chasing back in or slowly grinding up, getting stopped out. And that's kind of what's happening. It seems like, today, and that could change tomorrow, but, we'll see that the true test is not just a one-day thing. It's going to be a couple of days, see how this continuation, plays out. If we get continuation, we might not. So I think that's what's really important to at least pay attention to and think about as we go forward. So to start off, as of right now, we're up almost 80% advancers versus about 17% decliners. That's a pretty nice look right there. Again, though, look at this. Stocks hitting new lows. 144 stocks hitting new lows today so far, whereas only 49 have hit new highs. So despite the market, the Dow, the NASDAQ, and the S&P all green, you're still seeing more stocks hitting new lows than new highs. So I think a lot of that has to do with a lot of stocks, have pulled back from their highs. So, how many stocks are left to hit new highs? Not too many, relatively speaking, across the market, right? And a lot of stocks have been teetering near the lows or just on low volume, small caps, penny stocks. A lot of them may just tick down and hit a new low. That's kind of what you're thinking. How I see that. I wouldn't put too much weight on that. It's more of the trend, right? Do we continue to see this across green days, red days? Is this really exaggerated, right? That's the key. And it's so far that trend has been there, though. We have not seen a significant shift out of that, at least for the past couple of months, really, it feels like. So that's the deal. A lot more stocks have regained their 50 SMA. I believe on Friday, we were on the stream Friday, and we hit a point where 15% of stocks were above the 50 SMA. So that's a lot. That's a pretty weak number. Back below December lows, back below lows we've seen for a long time. And then the 200 SMA, we had at one point on Friday, I believe 20% of stocks below. Now 25.6 are above. So a little bit of a movement back to the upside there. A lot of stocks are kind of teetering all around those levels. So let's pull up SPY and talk about it. When I say teetering around those levels, I mean if we just take a look at the S&P, right? If I go to the daily chart on the S&P, it's just at its 200 MA. This orange line is that 200 MA. So, a lot of stocks are kind of around that point. I think Tesla, let's pull up Tesla really quick. I think Tesla's, hovering around one of those levels. Yeah, Tesla just bounced off its 200 SMA, and now it's kind of in between, right in the middle between the 50 and the 200. So I think a lot of stocks are kind of in that range, and that's what we're at least noticing as of late. So, those numbers are going to be kind of bouncing around. It's the 200 is a lagging indicator compared to the 50, but a regain of the 50 would be a good sign for a lot of stocks. So if we kind of get a movement back on, if we go back to FinViz and you start seeing, more stocks above the 50 SMA than below, well, that's showing some good momentum for the market and maybe more of a sustained move, or at least there had been a sustained move back up. So as of now, we don't have that because we're kind of on the stage one of a bounce, but we'll see if this bounce holds up and continues. That's the key. So if we go back to the SPY daily chart here, which I want to pull up, here's what we had last week. I mean, all these candles are tightly kind of, packed into a range, and the range was pretty big, right? Down to 420. Up to about 444. So it was a pretty wide range going into Powell and all that good stuff. But now we've broken out over that 200 moving average. A close over that level would be a good sign. I want to see multiple closes above that for continuation. But a close above is a great sign. And with how fast things are moving on SPY, like we said last week, we could be back up into the 450s in a matter of a day or two. And literally so far, we have a literal chance, in the last 2 hours of trading to get to that 450. We're $2 away. It's not that much. We're up $6 on SPY today. A $2 movement to the close, we can easily hit that 450 today. Now, that's where I'm looking at for a possible resistance. That would be because this level right here was a low. So if we do close up at 450, it may not be a terrible idea to grab some puts just for us, the end of this week, a weekly put option on SPY. Let's just look at SPY, just to hedge yourself if you're, mostly long, because we are coming up into resistance. And, while we could keep going and just melting higher and kind of slowly, grinding higher, sure, it might be a good idea to have a hedge on there. So I would look to the February 4th play. And maybe get like the 450 puts, which, they're $5. It could be a little expensive for you, but it could be a good hedge, or you can go with something a little bit out of the money, 445s for 350, something like that. And if we do push up a little bit higher into the close, these will come down a bit. So that's something that I would consider doing if we got up there. Or you could look to, play February 2nd, which would be Wednesday's expiration. And these are going to be a little bit, let's see, these are going to be on the put side. If you want to go for the 445s, they're like $2. So, you can play it that way. The 450s are just under $4.50, $4.50 per contract for the 450 strike. So, it's a little bit, I guess, cheaper if you want to play it that way. So those are two options I think you could have if you are getting concerned about this balance and whatnot. If you want to hedge yourself against your longs and whatnot, it's not a bad idea. Bad day for me. Lost 50% on SPY, 446 puts. Today, I thought we were going to come down and got burned. Yeah, I think a lot of people, honestly, I think that's not a uncommon thought. So if we go back to here, take a look at this. Here is today's open. We futures looked, when I went to bed last night, they looked pretty green. I was like, okay, looks like we're going to have, they weren't moving too fast. So, it was like, okay, it looks like we could be opening green. But again, based off how last week was, I didn't want to put too much, weight on that. Woke up this morning, saw that they were down. Like, okay, whatever. And we kind of grinded back into the open, and then we dipped down below. The key here, at least that I was thinking, was if we drop below the pre-market lows, which were down here towards like 439.35 or 439-ish, roughly, that would be kind of a possible downside move. And we kind of got that fake out candle right here. Look at this candlestick here on the 5-minute chart. So the market opens up. We dipped down, hit this 439.79, and then we ended up closing at the top of that candle. We closed up here around 441.66. So about a $2 move in a 5-minute candle on SPY, just like that at the open. And then we got above VWAP. The white line here is the VWAP, the volume weighted average price. We got above, we tested it right there, and then we pretty much held up and bounced on that and have not come down and dropped below that the entire day. So pretty strong action, and just to me, it just feels like seems like a melt up in a sense, right? Where you're not moving as much. Yeah, we are up a good bit. $6 on SPY is a good amount for a day, right? But it's kind of after some crazy volatility, after some crazy moves, and I think a lot of people positioned in puts, we kind of started grinding up, and we keep grinding higher, and everyone's like, well, you're going to get that flush out. You're going to get that flush out, and I'll be able to take profits, because after last week, everyone was so kind of ready for the big range. Everyone was so ready for, after a big move up or a big move down, that reversal to hit in, and boom, we can, lock in gains or make some money on the opposite direction, but that's not happening. So those things are really tough. That's why I think it's a really fascinating thing to think about and just to observe and see. And when you can, the biggest thing to playing range for a stock, for the market, for whatever, is being able to identify that range as early as you humanly possibly can. So if you quickly identified the range last week and after Wednesday saw that we kind of pushed up here to that 440s, low 440s, and then down here towards like the upper 420s were good buy ranges and 440s were good sells, then you could have put that range for like 2 more days, but now we broke out of that range. And so that range, that tight range, is not going to be around forever. And same thing with a stock, it's not going to happen, because once more people identify that range and are looking to play that range, that makes that range less likely to actually continue to play out the way that it's expected, right? So it's kind of like a whole mental thing, but that's part of the game. And that's why I was kind of expecting, I didn't want to I wasn't going to make a huge SPY bet for Monday on Friday, but I was like, the way that we're closing up, the speculation was, hey, we could kind of close up and then kind of open up Monday and just slowly kind of grind higher, and everyone starts chasing back in who had puts or who bought puts on Friday, because you bought puts on Friday, we closed at the top of the range for the week, so it makes sense to buy puts. But again, the weekend kind of goes by, nothing crazy came in the news cycle really, and the market kind of just starts to grind higher. So it's kind of one of those things where we'll just grind higher, it seems like, for now, until something happens, and then all of a sudden Powell says, something the Fed, something on the news, and who knows. and then things can change, very, very fast, and then we'll be back into a choppiness. And who knows, that may not come for a while, or that may happen tonight. For all we know, that's part of the fun of the market. So that's the S&P. It's ironic to see how quickly these things have flipped back. You said about NEO having a 10. Yeah, I mean, that's exactly it. I mean, if you look at Affirm, right? We've been talking about this too. Like, Affirm was one that had a really good day. It had a really good day, bounce back day, I guess, on Friday and today. I like Affirm for a bigger move possible, but look at this bounce back literally from Thursday afternoon. If you look at Affirm, you hit $48. Okay, from that level, literally 2 trading days later. The thing bounced 40% from those lows. Now, yeah, are you going to catch the lows? No one's going to catch those exact lows. But if you were to happen to have bought at some point, earlier on Friday, you're up 20. You hit 25% in like a day and a half. And that's not a penny stock. I mean, that's the type of action we're seeing across a lot of things. If you go back to check out NEO, I haven't actually looked at NEO today. Look at NEO, a 16%er today, and I honestly look at this stock. I think this is worthy of calls into the close. Because unless we kind of break this, let's just draw some lines here. If we can break out of that to the upside, but here's your flag. Here's your flag setting up into the close. I think these are set up so everyone kind of big move happens early, right? Then the stock kind of consolidates and everyone's like, oh, it's got to pull back. It's got to pull back. It's got to pull back. But these pullbacks are, at least today, they haven't been that big and they haven't been as volatile, and it's just been a slower kind of grind up and down. And so if you're not very, very quick to take profits on the down, you'll easily be, back in the red on your position if you're playing options, or if you're just even playing shares, you can be in the red very, very fast. So I honestly like NEO for a pop and maybe a push to $25, maybe even more by the end of the day if it can break this little trend line right here. But NEO, again, is one of those stocks that was beaten down for a while. It's been beaten down, and look at that. It had a kind of a crazy little move on Friday, finished up towards the highs of the day after having some decent range to the downside, and now today you're at a 16% day. NEO, same thing as Affirm. If you go back to the past couple of days on NEO, it's the same thing as Affirm we were just looking at before, right? If I pull up this chart from the lows on Friday to the highs today, the thing is up 27%. From those lows. Now, of course, again, no one catches those lows, yes, but still the range is wild on these things that have been beaten down. That's why I honestly love this kind of environment, ups and downs, because there's a lot of good opportunities, honestly, for these types of bounce back trades. And yeah, while I think we can see it's very possible NEO grinds higher and goes to 30 plus in the coming days and weeks. It's very possible that like a stock like Affirm, kind of grinds higher and goes to $90 in the coming weeks, right? But, we're at the trend line. It's not a bad time to take some profits and just let the things kind of cool off for a bit. And we'll see how things play out. So that's what I had. I had Affirm calls. If I was talking about on Friday, I had Affirm calls in my Robinhood. I sold them too early today. I sold them. Here's when I sold them. I sold them into this extension right here. I had them we can pull it up. I had this week expiration. So I bought them Friday. It was this week's expiration. They were $60 calls on Affirm. Well, actually, right now as we speak, they're roughly right. I sold them for $5.10, so they're roughly going for $5 right now. But at one point today, these were at like $7-8 at the highs, which is pretty wild. So yeah, we're pretty much back to where we're actually just under where I sold. So it kind of worked out. But now it cools back off, and this could be something that if it consolidates or starts to hold up and build higher lows, this is something that I want to watch for potential re-entries and stuff like that. So it's a lot more difficult, I think, to be honest, that I will find you'll see to play the short-term moves and kind of be trying to play the bounces and the rejections off of short-term moves if we have a market where it just kind of grinds higher for the next couple of days or weeks. But generally for your long positions, if you're holding longs for swings or just long-term investments, it's a nice time to be watching, or at least nice time to at least look at your portfolio, right, when things are bouncing up off bottoms. Now, obviously, a lot of people have been getting killed from the past couple of weeks, so maybe you're looking back. But you can't look at it that way. You can't look back and say, yeah, I was at this. I got to get back there. It's a terrible mindset to put yourself in, terrible way to look at things. All right, let's see. Tesla pushing 1K already. Is it really? Let's see. Wow. It's at 930. Yeah, this thing keeps grinding higher. This is, I would say, I look up to this level right here, which was last week on Wednesday, right? It was a pretty nice, they have the earnings. I guess that's why I pulled back so much on the earnings. But Tesla up here towards 990 is where I would be looking at next key resistance zone from the highs of last week. Kind of lines up, yeah, with the lows from, a couple weeks back too. So I like that 990 as the next level on Tesla. But yeah, I mean, this is one of those stocks that has been, wild. And so I would love it to kind of cool off and have a chiller couple days or a couple weeks, maybe months, possibly to add into a longer term, position, or add to, the IRA position that I have and whatnot. But if it's going to be balanced like this, I don't really care. I'm not really interested in adding to that position, honestly, or messing with that core position on Tesla. Just let it do its thing. And when people start saying, oh, Tesla's going down, and everyone starts, selling out, and we start seeing some, negative stuff in the press, that's when you start thinking about, okay, let's see if we can start picking some shares up for, the next leg, or at least, the next couple of years, right? That's at least how I see it. NIO and Power Hour, yeah, that should be a good one, honestly. Let's see. Let's pull it up right here. Yeah, it's looking like it wants to break that little trend right here, this flag that we're kind of setting up. I think it's a good idea, as long as the market doesn't, pull. I mean, it has been pretty stable today. That could change very fast. But NIO, let's look at the options for this week. If you were to play like the 25 strike, let's just play these. Let's just look at it this way. They're about 77 cents. Okay, so I think these can go to a buck if we get a move up to 25 today. So you can look for a move on the 25 strike. Plenty of open interest there, plenty of move. These are up 600% today, by the way, which is nuts. These can probably pop to a buck on NIO. So I mean, here's how you would want to look at it. Here's how I would like to see that it play out for a trade idea, right? Is I would like to see, if it gets rejected here, then fine. This is a spot to play puts, to be honest, until we break out of this downtrend here. Get above, pop up, test the highs of the day, see if we can get that level, then pull back to our trend, or pull back to our trend line around 2440s, 2450 or so, and then go. So that's what I would like to see in a perfect world. And obviously it doesn't happen perfectly like that all the time, but if it does, do something like that, we'll watch that into the end of the day. But not. Here's the thing. I think a lot of people get caught up, and maybe this market with a grind higher helps, and it doesn't matter. But a lot of people get caught up in playing the breakout trade right now. Like whether it's a daily chart, a 1 minute chart, a 5 minute chart, doesn't matter. If you're buying a breakout right here, it's kind of like you're just trying to get lucky on the trade. Right? Is it gonna? Do we all want to be in before the breakout? Yes, we all want to be in before the breakout to have less risk and to have a lower average, right? But I've found myself do this all the time when it comes to taking these types of trades. If I take a trade like this at resistance because I'm anticipating a breakout, usually you can get a lower average. It doesn't break out every single time right there. Many times you'll find that more often than not it doesn't right away, and you can definitely get a lower average. So for me, it's not the trade to take right now. I would want to see it above this line, get above this line, and then the risk parameters will be just below this line. Will be the stop loss, and that's it. So you can kind of clearly guide your risk. Because if you were to buy a call right now or buy calls now, in this situation, I kind of like calls as long as it doesn't go below the bottom trend line. I like calls, but you're going to have a long way down to have to average in. Is that something you want to do? Is that worth your time? Is that worth dealing with? I don't know. Probably not. Let's see. Netflix was a beast. I think I was looking at that earlier. Wow, 423. I had 400 calls on Friday that I had from Thursday night because it was strong on Thursday despite a weaker market, right? And the thing didn't really do it. Friday didn't really do it for me, and then it just ripped today. So it took an extra day, but it's up 10%. Now, yeah, it had this huge dump. So it's up into the gap now. Let's take a look at the daily chart on Netflix. It's up into the gap. So, I mean, your gap is to $500. Can it go to 500? I mean, I don't know. Maybe it could get back up there, but that's a wild looking chart for a large cap too. But 10% there, $40 up on the day. It's pretty nuts. Also looking at, first off, we haven't seen this. The left-hand side is my current list of positions, but we haven't seen a day where everything is up like that. Seems like in a long time. So I want to kind of go through and just check out on some of my stuff. I haven't looked at like the airlines and whatnot. Let's just take a look at JetBlue. Oh, wow. JetBlue's, whoa. Look at that candlestick right there. That's a nice little push right there. 5% on the day. Now, JetBlue was, I think, one of the stronger, or it's holding up better relative to the other airline plays. They had some good earnings actually last week. So I like it a lot. I've liked it a lot, and I like it even more, right? In terms of if I had to pick one and I put all my eggs in one basket, which is, never a great way to play things, but I guess when you're more trying to be more active in trading your portfolio and whatever, that's kind of what you do in a sense anyway, right? Because you're playing individual stocks, or if you're not playing the S&P and you're not just buying an ETF, or you're not buying an index fund, right? But okay, so JetBlue, I like it a lot there. But if you look at, here's the chart on JetBlue, right? Compare that to American Airlines, which I don't have American Airlines, but just look at it. Different story, very different story. American got killed last week. It actually dipped under $15, hit new lows for the year, for the past 6 months. And almost hit new lows on the past 52 weeks from last week, but it got close. But again, right, you were kind of back into the same spot you were literally this time last year. And look what happened this time last year on American Airlines. It had earnings, it popped on earnings, and it pulled back, and then it had a really nice grind from in the mid to upper teens to the mid 20s. So it had a really nice run from February to March. So we could be setting up for that same thing. And the reason why I like it too is because you're lining up the potential next year. You're seeing, less restrictions and kind of a pullback of some restrictions and whatnot and mandates in other countries. And I think we're going to start seeing that more and more in the US and other countries as well. And that progression in terms of virus scares, I think should just make people, I don't want to say make people feel better about it, but like the sentiment should change. The sentiment should really start to shift on some of these travel names as we move into the spring. And so, obviously you got to be kind of a couple steps ahead. The spring isn't for a few months. It's about a month and a half away, right? But still, being ahead of the game there, I think is going to be solid. I don't want to be buying the airlines, when they're making moves up, up over $20 on American Airlines. No. Buying it down here, yeah, is it painful sometimes? Yes, but I'd rather buy the pain on that type of play and look for the move to come when the move comes. And that's really it, as long as the fundamental play makes sense. Here's Jets. Here's the airline ETF. It's trying to get back up to that key area. All these stocks have been kind of hovering up just a few percent above, a few percent below a key area of support resistance from the past. So now it's resistance. It was support down here at like $21 or so on Jets, and it's trying to get above again. It seems like every time it gets above, it stays above for a few days and then it just gets hit. But maybe this is the end. This is the recovery play on some of these. Spirit Airlines was pretty weak last week. How was it doing today? It's up 5%. So Spirit Airlines was one that broke this daily trend, uptrend, and then fell off. And now it's trying to regain, or it's trying to get back up. It's got to get up over $25. 24 was the resistance point. It's got to get up over 25, and then I feel a lot better about Spirit. But it could do that in a relatively short period of time. It's a pretty bouncy play. It's a pretty bouncy stock. Down 6% one day, up 6% one day, and today it's up 5%. So it's like bouncing all over the place. Let's look at some other airlines. Delta Airlines, DAL, up 3%. Delta's holding up a lot better too. It held this prior area of support, which was kind of resistance-y, and now it's back above that 37, 38 range, and now it's trying to get up to 40, which would be kind of key. It couldn't break 40 last week, so over 40 would be key. A close over 40 would be great on Delta. Let's see, United. UAL is United. United Airlines kind of has the same look as Spirit almost in a sense. Got down to like the upper 30s, $39 was kind of your support level on United right here. Multiple times in the past 2 months, really we came down just under $40. But now we're back up trying to bounce, and it's up 4% today. So these are having a decent day today. But, when the market's up to the degree it is, it's not hard to kind of, I guess, in a sense, pick a stock that's up. It's just now the magnitude of some of these bouncing is kind of what you're looking for. So, you could play SPY. You can play SPY options and make, tons of money off of or lose a lot of money. But if you can pick on some of these stocks, these individual stocks, you kind of have a little bit less risk than playing SPY options. But you can be playing, options on some of these stocks that do bounce 10, 15, 20% in a couple days or a couple weeks. And speaking of those, let's go back to NEO really quick and let's just see what NEO is up to. So is it breaking that trend? Yeah, it is. Okay, so here's NEO breaking out. Now it's breaking out, but now would you want to buy the breakout right now? Potentially not. You're early in that breakout stage. If you see a bigger move coming, then you would want to stop yourself out maybe under like the lows from the past two candles, which is down here towards 24.38. But what I would like to see is it's doing it right now. Test a little bit higher, go up to that 24.60s, get up into the 24.60s, then have a candle pull back to this trend line and then bounce from there. That would be the opportunity I would like for calls. So again, we're looking at those calls earlier, the 25 strike calls for this week. They were like 77 cents. Now they're like 78 by 80. So you haven't really made a big move, but that's what they're sitting at right now. NEO hasn't made a huge move too. You'd probably need this thing to go to $25 into the close, which is roughly from here or 2%, which, hey, it's up 17%. So what's 2% in a 17% move, right? But it's pretty, you can see how it's pretty slow, but I would imagine that starts to pick up into the last, hour and a half of the day now. Volume should start picking up. But here's a perfect look, right? If you bought that breakout and you FOMO'd in, you probably bought a little bit higher than than what you may be able to get on the pullbacks. These, maybe they're small pullbacks, but the pullbacks from that breakout. So we'll have to watch that until the end of the day. But I like that setup on that breakout. AMD, let's take a look at that. Trying to catch another bounce at the bottom on cold to short natural gas. Let's take a look at cold and then AMD. KOLD. Pull up the daily on this guy. Look at that. Yeah, I mean, we were looking at last week. We had Boyle. Let's see where Boyle is setting up. It's up 9% today. Look at Boyle. Still pushing even higher than where it was. This thing from the secondary lows that we had, boom, 80% from those lows that we saw literally on the 20th of January. That's a killer trade. I was looking at ExxonMobil today as well. Is this thing breaking out? Yeah, it is. I had an alert there. I just in case. It got rejected by the 76, and I was looking at possibly for a put play, because this is up a lot for a pullback on oil, and we'll have to see. But this is not necessarily playing directly oil, but ExxonMobil has been moving pretty closely with oil, as you probably would imagine. So this is one that I kind of like as a possible short, but not anymore, as it's breaking out to the top end of this range. So until it starts to crack down and start to lose some momentum, I don't. Let it do its thing. Let it keep going. You go back on this chart, though, this is getting back up to pre-pandemic levels. This is right back up into that range. I mean, really, it is. So you blew out a 66, and then now you're back up into the mid-70s, which is pretty much where you were trading at pre-pandemic. So you're right back. You're fully recovered there on ExxonMobil. If you were a longer-term shareholder and you had a chance to average down, you're looking good. Or if you just held on and didn't care and you just collect your dividend, because they did pay a nice dividend. So if you were someone who took advantage of these sell-offs for ExxonMobil, they kept their dividend, I believe, if I'm not mistaken, they kept their dividend up there. So the dividend here back in May 2020, 87 cents per share, 87 cents per share, keep on going. Did they keep it the same? Yeah, they kept it the same here. From what I can see, yeah, they kept that dividend the same, which is killer. Because at the time, now it's 88 cents per share as the last earnings. At the time, right, this stock was down in the 30s. I mean, you're getting a nice hefty dividend right there. And then guess what? If you initiated a position down there, let's say, okay, who cares? You don't get the bottom. But let's say you got an average at $40, you're getting a nice chunky dividend, 87 cents per share. And in the past year and a couple months, you've looked at an 88% gain on your stock, which is killer. And the dividend along the way. This is one of those examples of a stock that I would just love to just toss into a pure dividend portfolio, toss it in, forget about it, let it do its thing. And that's kind of one of those things I'm looking at build out in the coming months too, going forward. And having just a bunch of portfolios set up for individual things, dividends, long terms. I have my index portfolios just so it makes it easier. This way I can really see, okay, how is my investments in the S&P, right, doing versus my dividend portfolio? Versus my, my long-term and, long-term growth portfolio based off like a Tesla type of stocks or like Apple type stocks like that. Looking for, obviously those stocks, I would say Tesla has a lot more to go. Potentially Apple, I don't know. It's probably, I guess it's kind of a cash park the way I see it now, but it's something that I'm not a huge fan of. Based on my age right now, I probably could find and do a little bit of a better job and find something else. I feel better with putting my money into Tesla and not worrying for the next 5-10 years. Apple at this point, it's seen such a crazy move. It's something like that my parents and my dad did take advantage of, a long time ago, 10 plus years ago. I remember back when I was in middle school, we were talking about he was buying Apple and whatnot. When I started to kind of show some interest in stocks, that was a killer, that was a killer investment at the time. But, I'm trying to find that being younger now, you want to kind of find that next, I'm not saying next home run, but that next type of stock that you don't have to worry about. You're probably going to get market returns at a minimum or not, if not better, as long as the market doesn't crash for the next, 5-10 years, and you're feeling pretty good about that. Stash that away. All right, AMD, let's take a look at that, and we'll go back to NEO and take a look. Cold is the inverse of Boyle. All right, AMD, how is this one looking? It's right kind of at a key area that we kind of had last week. So it's up 6%. Again, pretty nice bounce. But AMD, man, if this thing can kind of hold up here and regain the 200 MA, if this thing can hold up, I'd be looking up towards 122 to 130, and then up here towards like 140-ish is kind of the areas, the next levels I'd be looking at on AMD. I like that setup right there for this is a reversal. As we need to, again, this is looking good, but we can easily fill these gaps back down and head down lower and drop under $100 on some of these stocks if the market doesn't follow suit. So that's kind of the key, and how the market handles the next couple of days is really, I think, going to be great for sentiment and tell us a lot more about what's going on. So again, let's go back to NIO and see how that breakout is shaping up. Okay, so look at this. So right now, as we speak, there you go. There you have it. There is your pullback to the trend. Now it's holding the trend. So this could be an opportunity for a possible trade here. As long as NIO holds this trend line break, I like that for a bounce and for a move into the close, as long as the market holds up with you. So where are those? Those 25s, you can get them for 76 cents now, 75 cents on the $25 calls for this week. So pretty cheap, low barrier to entry there if you wanted to take a shot at those. I like that play. Maybe it's something I would do take in the Robinhood if I like it. Or I gotta check if I even have day trade stuff in this account. Let me just see if I can pull them up on the right hand side. Because I think I hit 3 last week in here. Had a good week last week and on the Robinhood, but I don't know if they are off the table as yet. Oh, we got one left, so we have 2 days. I only taken 2 day trades in the past 5 days, so I could do it in the Robinhood. We could pull it up in a second here. If this kind of pulls back a touch more, I like that a lot. Okay, that said though, in this portfolio we have some nice bottom bouncers today. So my small caps, let's go from lowest to I guess highest. NSPR up 4.5%. NVOS up 8%, VISL up 7%, and then SON went up 11.86%. So some good moves across some of those. Now, obviously they've been down a good bit. So is that getting you back to break even? No, definitely not. But hey, I still like those stocks relative to small cap land and their sectors and whatnot. And so I'm gonna let those ride. Pins. Let's look at pins. What's pins doing? We looked at pins last week. It was like in the 25-ish range, if I'm not mistaken, on Friday. Yeah, it hit just under 26 on Friday. Now it's bouncing. I mean, we looked at this last week and we said, hey, here's the gap. It pretty much filled the gap. So for a bounce play, this is a pretty good area to look at for a possible, for a reversal trade. I think what I'm going to be doing a lot more of too is using these kind of boxes to draw out my ranges and on stocks I want to trade and develop my range. So I've been doing this. I like using the box because I'm not a very if a stock hits a line, we could see a little bit of a move below, or it might not get all the way down to that line. So I'd rather draw a box and a range and position myself. And I kind of drew out a brief or a rough plan for this type of trade. But for the range or for the box trade, in a sense, I guess you can call it that, is identify a demand zone, a support zone, or a resistance zone. And in this case, for pins, let's say I drew this box, 2 weeks ago, and I'm like, okay, the second it hits into my box, I'm going to take a position, okay? And so in this case, it would have been roughly $32, okay? I would have bought some at $32. Say I bought 100 shares at $32. And then what I'm going to do is, as it comes down to the middle of my box, I'm going to buy another 100 shares, same amount, okay? So now let's say I bought at 29, okay? Now my average is roughly, what is that going to be, like 30-ish, 31 or $30.50, something like that. So my average is better. Now we're still below our average. And then what I like to do as well with that strategy is then at the bottom of my range buy 2x. So it's a four-part strategy where you buy let's say you can just play 1 share, 100 shares, 1 contract on options, whatever you want to do. And it could be, on a big picture daily chart, could be on a short-term time frame, but you kind of take this and buy 1, and then 2. And the reason why you buy 2 at the end is because you're buying at the bottom of the range or the top if you're playing on the short side, and you're buying pretty darn close to your stop. So in this case, I don't know if I would have hit. I probably would have gotten to 25 bucks would have been my last ad. So I'm not sure if I would have gotten that. But in this case, if 25 bucks is my final ad, if we close one or let's say 2 days in a row under 25, I'm out. So I'm not going to risk much more. But if I was to buy super heavy, or if I bought 200 shares at the top of my range, and then you utilize the next 200 that I had in my back pocket of this strategy to add in the middle of my range and then add at the bottom of my range, well, my average would still be kind of skewed or weighed up towards the top of the range. So I want to do it this way so that if I do those 2 ads and it goes, great, it goes. I didn't get a massive position size, but I don't care. It's fine. If I don't, or if it doesn't go up, doesn't work out that easily, and we come down to my levels and it hits the bottom of my range, and let's say it bounces there, well, I'm going to have a really nice hefty position size, obviously within my risk tolerance, and then I'm going to have a nice low average. So if we get a really good bounce back, I'm going to have a nice low average on this trade. And if we don't, my risk, my heavier size that I add at the bottom is very, very close to my stop anyway. And so I don't really care. If it hits my stop and drops below, okay, I can take my loss, and I really only going to lose big on the first 2 ads, which even in this situation isn't a losing big scenario, right? You have your risk outlined, right? But that's kind of the idea behind this trade. I mean, I don't know. I haven't backed my way fundamentally into this stock, but it's an example of using that range, that gap fill, to guide a trade there. Disney. Let's take a look at Disney. This is also, by the way, Pinterest. The 50 SMA, we have been below this blue line pretty much since August, since the earnings report in August or end of July. We had one little pop right here that it had a great run, but it quickly came back below. So 50 SMA right now is at 35 roughly. So that's going to be your key, that blue line on the daily chart. All right, Disney. Disney? Okay, it hit the same thing. It hit this gap fill right here. Then it kind of reclaimed this 137 that we had. Now it's up into the next gap, so we can I'm gonna get rid of this little line. It's a lot of confusing stuff here. Okay, so we filled the gap down roughly on one candlestick wick. Is it the best fill? Not necessarily, but hey, it's fine. It got the fill. Now it's pushing back up. It's breaking out of last week's range. Now you're in this gap. We can draw a small little gap right here. Here's your little gap that you're in right here, possibly to fill this up. So resistance on this up towards 147. So you got about a $5 move roughly from here in this gap. This could be a good overnight trade idea, as long as you're bullish on the market too. If you're bullish on the market into tomorrow or into this week, this could be a good overnight play where you look at like some 145 calls. Yeah, these are trading for a buck, less than a buck. 145 calls on Disney are under a buck, and you can take those and you can wake up tomorrow morning, possible gap up, or just if we continue grinding higher and hit that 147, those are going to be nice by the end of the week. Or if you're up good, we'll come tomorrow, Wednesday, it could be a nice take profit type of day. So I like that. I honestly like that chart. It doesn't look too bad to me. It's got range back up. If it can get back up here, it gets up over 150s and up over 160s, then yeah, we got this next gap here up into that 170s. But hey, it's a long way out for now. But hey, if at some point in the coming months we kind of see Disney make a move, something like this, those are going to be key zones to look to take profits, to potentially enter a trade and whatnot. So it's going to be something that it's key to look at, and we'll extend these boxes over to the side over time. But these are going to be key areas. At least I like to look at them, and you kind of see how a lot of these stocks respect them. It doesn't mean stocks don't have to fill their gaps, and they definitely don't. But it could be a good guide to support resistance zones and areas to take profits on trades. So that's what I like looking at in terms of some of those places. Let's look at NIO again here. We look at the bigger picture NIO chart. NIO has got a gap right here from like 26 to 27. So if NIO can get up over 26, then we can look to 27 bucks as the next level. But here, as we speak, NIO is just kind of sitting still and just kind of holding up. I want to see this thing hold this, roughly hold this downtrend line. And then it's a possible, I think it's a squeezer into the close or a possible run to the close, as long as the market stays strong. Or we could see some profit taking to the close, potentially, which could draw some weight on some of these stocks. Let's see. So those 25s are now worth 75 cents roughly. You can probably get in for on those $25 strikes. So this could be even one that you would take. I would say let's look back to last time NEO had a crazy trender day, right? Where NEO had a 10% day. Here it is. We had actually a 20% day, I believe. It was back here on the, what is this day? This is the 30th of December. So NEO goes from like under 28 bucks to 33 by the end of the day, then closes just shy. It drops a little bit into the end of the day. So it dropped a little bit into the close after a big day. So it's something to think about. Then we kind of gap down over in after hours into pre-market hours, and then tried to go higher on the next day. We got rejected on that day by the prior day's highs and then fell off. So it's something to think about. Just looking back to past history, then we eventually push a little bit higher on the third day, I guess. Does it mean NEO has to do the exact same thing? No, now, but it's something to at least think about. After some of these big runs, there could be some profit taking or some selling into the close for those who bought in today, for those who, because you have a pretty big move if you bought in today. Or the overall market could pull back a little bit if we get some profit taking just in general. So that's just something to think about too as a downside risk on this. But if you were playing this and we got a nice move and it pops up and you're up on those contracts, I think it's worth, let's say you bought 5 contracts and you spend, what is that, like $400 roughly on these contracts. If you buy 5 contracts, you spend $400, take off 4 and leave 1 to ride. And if you get lucky with a gap up type of trade, then, boom. If not, most likely you're not going to be down huge come tomorrow, even if we get a gap down and drop lower. But if you get a gap up, then those can be up, 100% tomorrow, and you can be, sitting back and just, chilling for the nice little made an extra $100 or whatever it is. So that's an idea too. Just take most of it off on the bulk of the move, or at least if you don't want to have too much risk on overnight, and then at least you have some skin in the game if we do gap up and go for more this week. Palantir has been wild. Palantir, where is Palantir today? PLTR. 6%er. So Palantir has been holding the VWAP. Look at this. It's holding VWAP all day long, which is pretty cool to see. It's been a good day for if you're trading the trend. It's been a nice day. You could have had Palantir off the VWAP pretty much multiple times. Here was one opportunity in the morning for a nice move, another opportunity right here, and then a smaller one here, and now it's kind of getting close again. Let's look at the daily chart on Palantir. So it put in a possible bottom past week and a half, hit 1175, then hit just shy of that on Friday, and now that was on Monday, 1175. Now it's pushing back up. So I have a line right here. What is this? Okay, it's a key area at like 1430-ish, 1450 is kind of key. If we get over 1450, then I like this thing back up to $17. Yeah, the 50 SMA is way up here too, up over 17. So I think we can see it move to 17 if we can stay strong in the market and on Palantir in general. It's up here though. It is up towards the top of the range from last week. So Wednesday, right before Powell comes out, we got up to roughly just shy of 14, up into the mid 13s, 1350 to 1375, and then we got rejected hard into the close. So we're right up into that same range. This seems to be lagging SPY, because SPY's chart was very, very similar, to be honest, the S&P, except SPY's chart is now, it's pushing up into like this range. It broke out of the range or Wednesday's highs, and now it's going, $4 or $5 higher than that. So we're kind of a little bit of a lag behind SPY, at least on Palantir for right now. But in the meantime, we have a line that I had down here towards 1150 or 1140. That was the highs on the initial first day of trading right here, back to 1140. It's a key area. Now, there's not too much chart history, down to these levels, so we don't really have too much to go off of, but it's just drawing some areas that have been crucial, at least in the past, in this 1320-ish area. Also, and it proved it again, right? Look at today, right? It got up there, had some resistance, it got stuffed a couple times, and then eventually broke out. So you kind of can see that level was crucial, that 1320. It wasn't just like it blew right through it. It did have some trouble for about 10 or 15 minutes, and then eventually it blew through, and then now it went up to 1350s. Let's take a look at some of the top gainers today. So INN is a top gainer. Had some news, I believe, this morning. Is this a recent run or two? Not really, but if you look at the chart on this thing, it was oversold. It was, I guess it ran a couple months ago. KSCP, recent IPO. Kala, C-A-L-A. Look at this guy. This is a cheap penny. It's up 40% today. A sub $1 stock. It was roughly around 40 cents literally on Friday. Now it's hit up to over 60 cents today, and it's trending and it's holding up. It's building higher lows, and the volume's there. How much volume is it? Today we've traded so far 16.51 million shares, which really isn't that much, to be completely honest, but it's notable if this continues to hold trend. I was looking at XELA last week. How was this? Oh, this is shaping up pretty nice. I liked it last week. I think this is going to be a good trade. This is going to have more in the tank, and it pretty much is doing exactly that. So these are good stocks to have on your radar. For example, Kala. That's one I'd put on your radar right now and just watch that one to see how it holds up the coming days. Not to enter right now, but for the coming days, if it holds up, kind of like XELA, how this thing had a bounce, right, from 34 cents to 75 cents. Okay, big day. Hey, I missed a 100% move. Okay, whatever. But it pulled back, and then it started to hold up, and it didn't drop below 53. So I drew a line right there. And then I had a 60 level because that was kind of a key. It was roughly the highs right here on the first run-up day, and then it kind of was a key area in the past, dipped down to that level on the close of the 26th. So it was kind of a key area, and then eventually you got above it. Now we're holding above 60. So as long as we hold above 60, I still like it. Now the risk reward to me is not great. I would have loved to have had more cash. When I was looking back at this thing, I at the time didn't, so I didn't take the trade because I didn't want to tie up more capital that I wanted to at least have as a backup in case something happened. Right, if the market crashed or market pulled back super hard, I would like to have something to be able to do something potentially, whether that's hedge with puts if I need to, or buy a dip on something, or buy a SPY call for a bounce back trade or something like that, right? But this thing popped up, and now it's been building higher lows. I think we break 75 cents at some point. Let's just see how the next couple of days go, and let's see if you watch this to build higher lows. Now, if it pulls back tomorrow and it holds 60, then watch that as a key area and see if it holds 60. If it holds 60, you can take a position and risk yourself a cut it under 60 and potentially look to re-add it down here in the 53s if that's what it does and it comes back down and holds that level. Those have been some nice momentum-based swings on some small caps to play. They've been there. They have been there. Look at this, Best. Look at some of these small caps. They're making some of these micro pennies are making some moves. When I say micro penny, I mean stock under a buck. Look at Best. Look at this chart. Oversold. It's just getting up to that 50 SMA right now as we speak, up around 90 cents. Pretty big day on Best. Only 3.5 million shares. So you guys can see that not a ton of volume. This one kind of floated up after the open and just kind of kept going higher and higher, and boom. These are types of examples. If you are in a stock like this, I don't care where your average is. This is just a word of caution, I guess, in a sense. I don't care where average is. If you want it to go to your average and you want to break even, I don't care. You have a 30% day, take something off. Whether you had 100 shares, take off 15, take off 25, take off 50. I don't care. You can probably, chances are, you can probably get it lower, or at least you're going to be a little bit de-leveraged or de-risked in a sense, in case we do see further downside. Just something that I think is key and crucial. Sometimes you'll get continuations and you can't, what are you going to do? But other times you'll go through periods, long periods of just declines. And you are going to be looking back to that last spike and say, well, I wish I just took something off and I would have had some more powder to buy this dip or lower my average on this dip. If you like a stock like that, just, whenever you get a 25% plus move in a day, I think it's just always good to take something off the table. Now, if this had news, especially if it had no news, especially on no news, if you don't have any news or any real reason for the stock to be up other than just it's up, that's telling you, or at least that tells me, I'm definitely taking something off no matter what big picture idea I have for that stock. I'm just kind of going through some of these top gainers and just seeing a lot of these charts are honestly looking very, very similar. A lot of these charts, man, they are pretty oversold, and these stocks are kind of just slowly kind of trying to get back or build back some of what they lost. Look at RML, Romeo Power. This thing has gotten destroyed. This is a SPAC. I think at one point, it was $10. It was a SPAC, hit 10, and then opened up 10, hit 38, and then the thing from 38, man, it hit 230. Wow. TDCX is up a lot. ATXS, just looking through a bunch of these. Arrival, ARVL. Wow, this thing was up in the 30s as well after the SPAC days. I remember that hit 37, and look at it now. It's hitting the twos last week, and now it's in 391. It's pretty good. Yeah, 25% is pretty good. XCUR. This one is a little bottom penny play. Look at this. It's kind of building some volume here. It looks like they probably had some offerings or some negative news or earnings or something like that trotted this thing down so much. But you're looking at a market cap of 16 million, so it's a pretty cheap stock here, market cap wise, like a nano. nano cap, I guess. This has some good range back up to the 50 SMA. I think could be a nice possible bottom bouncer on that one. FTFT, a little crypto play. Bitcoin, how's Bitcoin doing? Let's take a look at Bitcoin. I'm just going to pull it up on the side. Bitcoin's at 38,400 and Ethereum's at 2,600 roughly, or almost 2,700. So it's pretty nice and bounce back on those. Ethereum's up 6.5% today and Bitcoin's up almost 4%, which is cool. Ride, Lordstown Motors. This thing is going to kill the CEO, man. I think I don't know, but I think he made a fool of himself, or at least said some stuff or couldn't deliver. They've been a kind of a mess from last I've kind of really heard about them. So they've been kind of head to the dumps ever since. And at some point, though, people are going to pick something up. Someone's buying something at some point, right? Market cap here, 575 million. I don't know. Maybe this is a scam type of company like a Nikola. I don't know, but actually, I'm curious where Nikola's at too. Nikola Motors up 5%. It's in the almost $8. Hit $8 today. Pulled back, but it did dip below 7 last or 2 weeks ago. It's pretty nasty, but Nikola, I mean, I'm surprised it's still around, honestly. Let's see. You're an options trader now? No, not really, but I will take, if I see an opportunity, I'll definitely take it. And now I have a lot of options plays on currently in the portfolio. Because small caps have been just dead. So why am I going to, obviously you could short small caps, but I'm not someone who's going to be like, oh no, it's not moral. Nothing against that thought process, but if I think I can make money on the way down, I'll make money on the way down, but I'm not going to short a small cap at the lows, right? And the problem is, if you go to find the ones that are looking a lot more appealing to short, they're the ones that are being kind of just recycled in the same kind of, next couple of days, next couple of weeks. They get recycled and they get pumped again. And so it's like, the risk of bidding in those on the short side is not really worth my time or worth the risk, right? And then I'm not going to short a small cap at lows. Like if you were looking at some of these stocks, I don't know, I think WEI was one that popped up my radar today. Up 14%, but WEI, if you look at this chart, like why would I short a stock like this at this point? So it's like, I don't want to do that. I know you're kind of trading the trend, but you're playing a very dangerous game, shorting some of these, low floats or small caps down this low. You're one press release, you're one pump, you're one, big insider buy potentially away from being up or being down big in a very, very short period of time. So I don't see that. I don't like that's worth it. If I'm going to short, if I like shorting small caps like that, either you're going to take a day trade on that short because it's a very short time frame, move, or you're going to play something with a heavier float, with a bigger float that you have time and a much less risk of waking up to that thing up 100%, if you know what I mean. So like, I don't know, like an NNDM, it would have been, in hindsight, looking back, would have been amazing because this is a pretty decent size float. If I recall, the free float is 246 million. So there's a lot of shares here. There's a lot of action. Yeah, this had its time on the way up, but even over the past 6 to 12 months, there have been tons of opportunity on the way down to take advantage of. And it's not a super low float. It's not like a 10 million float where like, okay, all of a sudden somebody wants to buy a crap ton. They hit market buy and the thing is up 10%, 20%. Boom, it's halted up. And next thing you know, the scanners are flying and everyone's jumping in and FOMOing into it. You don't need to be in that type of stuff. SoFi, let's take a look. I was looking at Jets for the February 18th strike. The thing about that is personally, I'll look at that in a second. It's taking a lot longer. I guess I am, if you just go back to last year's timing, I was definitely early to the party there. I do expect a big move on that. It's just when. And so shares or even just longer dated calls are probably your better bet, or in the monies. Like if you're going to play like a leap or like kind of like I have leaps, you want to go for something pretty deep in the money. And that's at least a few dollars on Jets in the money. And then that's a better way to leverage yourself. If you don't do it that way, you're pretty much playing a very tough game of like, okay, I kind of need to be right in this period of time. And it may happen and it may be killer come like the spring, but I don't know. February, the airlines really got going last year, February into March. And I think we're going to get more of that sentiment shift in the news cycle in terms of restrictions and mandates and all that stuff really starting to subside and be lifted as we move into the spring. And we're seeing hints of that, but I just, when we need the market to be kind of firmed up, not like it doesn't have to be going up every day. It just has to kind of be roughly stable and steady. And then if we get that factor in the sentiment shift there, and we've been starting to see that, but the problem was we're starting to get some of that sentiment shift in the news cycle, government wise and whatnot. But what we weren't getting was the market to cooperate. The market was pulling back while that kind of was happening. And so you see how the airlines still had that weight. So it's kind of, you got to play, it's balancing two different things in a sense. SoFi was looking pretty nasty. SoFi is teetering around this level that I had right here around like 11 or 12 bucks. I like SoFi a lot. I think this is going to be a stock that'll be great in the long term, but you're going to have to weather the ups and downs and the volatility. Again, this is one of those high beta stocks. So if we get a big move in the stock market, say we're up 1%, up 2% on tech, right? Almost 3%. Yeah, SoFi's up 11. But if we have a down day tomorrow and all of a sudden tech is getting sold off again, this could be right back down sub, 11.50, sub 11 bucks, like just like that. So it's just one of those stocks. I like it a lot, but I think you're gonna have to give it some time and play. You can play the range to a degree. Obviously, right now you're kind of towards the bottom of the range, but if you drop below 10 bucks, you could be getting into a point where the sentiment kind of just clicks off and no one cares about it, and it just floats down like a lot of other, prior SPACs, and just kind of floats down for a while. I don't think SoFi is in that category, because I think it's pretty obvious that they're like a real company, and it's like a lot of these other SPACs that kind of went public. It's like they got such far timetables until they got cars on the road, if they're EVs or products into the shelves and products in hand. So it's a lot of the timetable is really shifted for some of those, and people don't want to play that game. They don't want to wait right now. It seems like. But if you have the patience, these are in my opinion going to be good dips to buy on SoFi. I don't think SoFi is going anywhere. I think it'll be great, especially once you see a big shift too with a lot of these loan providers and whatnot. Student loans are, I guess, May is now the time frame for a lot of the federal loans to be to get back into repayment. They've been paused. I think you're going to see some big numbers out of them in terms of people looking to refinance with SoFi. So I think that will be a positive catalyst. They've had some positive catalysts, but the market wasn't cooperating until at least now. It's up 11%, but I like it. It's kind of in a good spot risk reward wise. Obviously here, target I would have to take something off if you're more of a trader, not really a long-term investor, up towards like 17, 18, and then bigger target will be up towards 25. Those are kind of targets to look at unless you're just a long-term holder, going to hold this thing and not going to worry about it for the next 5-10 years. Then obviously you want to keep up to date on the news and company and how things are progressing and see things moving in the right directions, profitability, revenues, growth, all that stuff. As long as it kind of stays in line with what you're expecting or it's looking pretty good to you, then there's no reason to get out of it, in my opinion. Okay, Jets. So pull up Jets here. Let's go to Jets. So it's up 3.5% today. Looking at February 18 strike. Yeah, I mean, here's the thing. I like, if you're playing 18 strike, which is in the money, or you're playing February 18th, 24 strike or whatever. Yeah, that would be a decent run it would have to make. I think you can get a move on these guys if the market stays firm this week. I think the airlines could literally go 20% this week from the lows, from today's lows, right? So maybe not on Jets, but individual names. So like Jets, I think Jets could get back up into the 22 to 23 range this week if the market stays nice and strong. But that's going to be kind of correlated to the market. So from here, from today's lows, roughly, that would be about a 10 to 12% run on Jets. But individual stocks, like if you go to like American Airlines, this thing can be bouncing back up to, let's say, from where we're at right now, I can see back to these levels right here. This thing could be back up 20% pretty quick. And if you look at some other ones, some other higher betas like Spirit Airlines is one that I like. Spirit Airlines, because this thing could be bouncing back from where the lows were today up to the highs of last week, even higher. It's 20+% move. I think it can go for more. And Save's chart is really nice too. If you look at the bigger picture on the chart, tons more range, I think. No, I don't think we're going to go back to here on some of these airline stocks, even though I think we're potentially the path to, I guess, normalcy and is clearer now. I don't think we're going to go that high that fast. If we do, great, but I'm not betting on that. I'm looking for a move to here. 31 to 32 bucks is where I like on Spirit for my profit taking, just to really to take a good chunk off is what I'm looking at. Spirit's up 5% today. That's pretty good. It's pretty solid. It's holding up. And then JetBlue is up about 4.6% on the day. I like JetBlue's chart a lot, man. I think this is going to be I think it's a magnet to $18 in the coming with some strength there. We'll see how that plays out though. Gevo or Affirm. Let's take a look at Gevo. I haven't looked at Gevo in a long time. I feel like Gevo did me so dirty one day. Like, I mean, 2 years ago. I want to say June of 2020. We can probably find it. Yeah, here it is. Here she is right here. June of 2020. It was nasty. Offering, well, I had a trend right here that cracked, and I should have gotten out. I didn't. And then I got caught in an overnight offering, was a dirty one. Went from like 80s to 40s, and then it bounced back up into the 80s like 2 days later. So I actually added more, and then I was able to sell it for a profit, which was fun. And then eventually had some news and popped crazy a couple months later, and then thing is just done its thing right since then. But now your bottom was at 281. Oh, that's a pretty cool spot. Lines up really nice. Look at that. Lines up very close to the higher, the spike we saw back here in November of 2020. Spike up here to 285 or so. So at that level of the 280s, if that holds, that's a possible good support area. Target, I would say you'd have up to about $4 is like a good target to take, and then up past 4, like this level right here, these lows, 450s to 5 will be the next two kind of areas to watch in terms of Gevo. I'm not sure though. I'm not a huge fan just because of how small caps have been. Now, okay, I know it's oversold a lot, right? But just because of how small caps have been, it's very possible that they stay that way for longer than you can kind of handle. So personally, I like Affirm instead if the market stays strong. Affirm, what's it at? 6% today? Yeah, it hit the trend line that I had. Now it's pulled back a little bit, so it offered a possible re-entry or whatever. Ideally, I would like to see a break of this trend line and then pull back into like the 65 range or 66, whatever, and then a bounce back, then a bounce to $90 or a move to $90 with a nice market. That's what I would like to see. It's just at least what I would like to see, but again, doesn't have to happen, obviously. All right, NEO, I want to go back to this guy. What is it looking at? Okay, NEO has kind of just been sitting there. Really just been sitting there. It looks like it wants to do it, but it's not. It hasn't done it yet. Those options on NEO, by the way, those are still right around 75 cents. So if this is going to have a little squeezer into the close, it's going to have to happen. I got about 55 minutes to do it, so we'll see if we can get it. What do you think is a good investment for a long run, 12 to 18 month? No Tesla, Apple. Let's see. To be honest with you, we were kind of talking about the airlines. To be honest, I think the airlines are a really good play. I do. Because we're going to move into the summer period, and these I have been saying too, and I really believe it for the next couple of years that we're looking at a pretty, unless obviously anything can happen in the next couple of months or next whatever year, crash wise or this, who knows. But if everything kind of stays relatively simple or at least somewhat stable worldwide, market wide, I guess. I like the airlines a lot because I think they have a lot of pricing in to do in the next couple of years, next 2-3 years, I would say. A lot of pricing in for the future growth of that sector. And I think the past couple of years are really going to be, I think it's a good story or a good storyline the next couple of years will really be travel demand. Now, okay, are you going to look at crazy returns in terms of you're not going to get like hundreds and hundreds of percents? No, but it's a solid play. These things are I wouldn't say they're not oversold, but if you look at like American Airlines, for example, just one of the examples, right? Look at this. I'll go to the weekly chart on American Airlines. Now, it's obviously well above the lows from the pandemic. This thing hit $1. That's insane. The pandemic low, here are the lows. It hit $8.25. Those are those lows. We're well above that level, but we're nowhere near where we were. And I believe that, while things were kind of downtrending for that period, I don't think that's going to be the case in the next couple of years, as long as nothing affects travel to a huge degree. Pandemic obviously is the downside. But if you're a believer that this kind of starts to, I don't want to say blow over, but if it kind of starts to clean up and people get back to more of reality and it is what it is, and that's it next couple of years, then next couple of years with vaccines and everything that's been going on, right? We should be getting back to normal, and we should have a pretty high demand for travel. Now, the only reason why that may not happen is you have the other downside limiters right here of oil prices, which is kind of a key. If oil stays very, very high, that is a negative on the airlines, right? Now, if you believe oil comes down off these highs, then there's an opportunity there. Or I guess just fuel prices, right? Next thing is going to be business. There's business travel, and then there's kind of leisure. So right now we're seeing a move back in business travel, like a better move back. And we've had some of the recent airline earnings come out to talk about like, okay, they see business travel going back to this level by March, by summer, whatever. Okay, great, cool. But I don't think that matters. Business travel is whatever. Who cares? You're going to see honestly less. I would think you're probably going to see less because with the pandemic, it kind of made people realize, hey, we can work from home. We don't have to travel. We don't do this. We don't have to do that stuff anymore. But I think leisure is kind of the key. And that's where I think you're going to see a lot of people that have a lot of pent-up demand. And that pent-up demand is going to come to a point, or at least it's going to have a nice impact on the airlines in the coming years. Because there's a lot of people out there who have not traveled literally at all the past 2 years. And, if at some point they feel comfortable, or if they haven't felt comfortable, or if they just they haven't had the need to, I think we're going to see a lot of that going forward. And I think American Airlines could really see numbers boost up in the coming months and years. And I think we could be looking at a really nice run for the airlines. I think American Airlines, I'm not saying this thing has to go back to $50, but if this thing in the next couple of years goes from where we're at right now up into that 30, 40 range, let's do the math on the trend line there. If we get back up into that 30, 40, maybe dare I say mid 40 range, right? Which is, back to levels we saw back in 2016, 2017, 2018 type of levels, that's almost a 200% return. And that could be in the next couple of years. I think is very, very possible. So I like that. I like those plays. Obviously, you can't, you never know what's going to happen worldwide and whatnot. So who knows if there's some massive crisis that all of a sudden kills everyone's purchasing power, inflation, or there's some massive next pandemic, who knows, right? There's obviously all that stuff that could play into the role, but are you able to predict that? No, you can't predict that stuff. So that aside, I like those stocks, to be honest with you. I don't know about a lot of high tech stocks. I don't know. I really don't. I'm not necessarily a big. I personally, in my long term portfolio or IRA, I'm looking to stack a lot more cash and just wait on a lot of these things and just wait a little bit longer, see how the next couple of months play out, see how this year plays out. Obviously you're kind of missing out on potential gains. But I have some positions, but I would really, really would like to just situate myself after a bigger move down in the markets, or I don't want to say a bigger correction or a crash. Who knows? Not that you can bet on one to happen, right? But I would like to see some more downside in some of these, tech names and whatnot. Like SoFi, for example, is a good one that I love. But hey, if SoFi drops under $10, that's where I'm like, hey, this is starting to get really interesting, and I like that a lot for the next couple of years. Outside of that, though, on the top of my head, there's definitely plenty more where that came from. But those are some that I like. Airline wise, so you can pick a bunch. You can pick the Jets ETF as one of the ideas. I would probably the way that I would do it is go about pick 3 airlines or 3 to 5 and just kind of have a basket and spread your money out across that basket, and boom, there you go. You have your little list of airline stocks to play or to hold for the next couple of years. All right, let's go back to SPY. Here's SPY. It's kind of pulling off into the close. So this is kind of one of those things I was a little bit, I would say, nervous of, because it's not like a big move. But for some profit taking and looking at NEO, for example, NEO is cracking down below. So that stop loss would have hit. If I took that trade, I would have been out now into the close. Yeah, because it's kind of you kind of looked at a big day like today, or a trending day like today, and you kind of can see that a lot of people have made money off of just buying the open, and now you're up a good bit into the close. Let's take some profits off the table. So we'll see how that plays out. Open Door stock Q4 earnings predict 1,000% up year over year. Let's see. What is Open? I don't know. I'm really definitely not gonna try to predict earnings and whatnot, because it's just a losing battle, number one, and it's just also no one knows. Realistically, no one knows. So $8 is my level right here. If it falls under the lows from this past week, $8. If it can't hold that, then I mean, it's probably going much lower, or at least in the short term, it's going to go lower. And that earnings is kind of it's going to probably need to save it. Some good earnings could save this thing and get this thing building some momentum back to the upside. But I don't know. I really, we're reversing off the 8, but $10 can't get above 10. There's a little resistance here at 10.50, and then the 50 SMA is at 13.50. So there's some areas to look at in terms of upside from here, from that snapback, bounce back type of idea. But I'd just be careful on earnings season. I know some stocks have actually been doing a little better than maybe we thought at least reaction wise. But Tesla's a good example. Tesla comes in, and right now Tesla's back up to where it was anyway today. But Tesla comes in and drops earnings, and the thing kind of drops off, holds up, and the next day just sells off big. This thing sold off in one day after the earnings. This thing sold off over 10%, 11%. So, it's a who knows. That's how that's going to be taken in the coming sessions after the earnings report, right? So there's just kind of that same battle. NVIDIA's a beast. Yeah, I think this NVIDIA. Where's NVIDIA? Yeah, let's take a look at this chart. Yeah, it's actually at a really crucial spot. If I had to take a trade, I would take a trade short here on this guy, but that trade maybe already happened today. Look at today. Yeah, I mean, it got right up to that spot today, but if it breaks out and goes higher and gets back up and reclaims like that 245, I like this thing for a move back up to 285 in the short term a lot. Really, that'd be nice. Let's take a look at Lucid. I'm curious where Lucid's at today. Looking at some EVs. Lucid was up and now it's coming down. Lucid got killed, man. This thing got really killed last week. Big time. This thing, it's had some ups and downs today. A little more choppy action, less kind of solid and just trending. Although the overall trend was up until now, it's starting to kind of pull back and it's trying to crack VWAP to the downside. So you're seeing a decent little pull on some of these guys. Here's SPY. Yeah, that's why S&P is pulling right now. So S&P just pulled about almost $2, so roughly about $2 from the highs in the past half hour or so. Pulled back about. But hey, it's still up 1%, which is pretty nice and pretty impressive after, I guess good to see for your bull, right? Haven't gotten on a plane in over 2 years. Yeah, but I think that's the pent up demand I think is going to be there, And there's a lot of people that are in that situation and who, will probably, when they feel comfortable to do it, will probably start flying a good bit. And I think as long as things are good in the next couple of years. And I like that trade just as a sector in general. The airlines, with time though, obviously if you have put time on your side and don't worry about it too much, and you shouldn't, if you're looking day to day, you're going to have the fluctuations. Again, we're seeing how like last week, some of these airlines were up 5% one day, or 2 weeks ago they were up 5%, and then they had 6% down days, and then today they're up 5%. So it's like the fluctuations are going to just drain you out. When you have, and that's one of the things that I would like to do more of and just separate, because right now we have a bunch of stuff kind of going on in the same portfolio. But if I separated those and had a separate account or put them in my IRA or put them in, because that's kind of a trade for the IRA, where the IRA is for me, it's like, okay, you're not paying tax on the gains. So great. But it's also something that like, I would love to trade the IRA at some point in the future actively and not worry about it, because hey, if you're making gains in the IRA, right? Technically, yeah, okay, you gotta pay penalties to pull it out. So I'm not gonna pull it out now. But if I had, if I was just chilling and I was playing with the IRA money, and that would be fun, because if you can compound a portfolio or beat the market returns, and you're doing it in an IRA, that's a lot sweeter. But yeah, I mean, the IRA for me would be more of like, okay, I'm just gonna sit back and put these trades on and put these positions on, and ideally I'm looking to beat the overall market returns and stuff. Ideally, but it's something that I don't want to look at too much, at least at the current stage that I am in right now. I don't want to look at it too much and let it do its thing, because it's so far out, right? At least for me, I got plenty of time before that money is really available for me to pull out tax-free, penalty-free, right? So let it do its thing. I also want to pull up some of the biotechs. XBI, I like this sector a lot, really, because it's just so oversold. But does that mean that they have to bounce? No. So XBI it's up 3%. Say it's a nice day for XBI, but it's still kind of choppy. So we got to get back up over last week's highs. Up back, I think $100 is key on XBI. That could happen this week. It could happen next week. It may not happen, right? On XBI, but this is kind of starting to show it's trying to break this downtrend. Roughly, we kind of saw last week. We can kind of see that this downtrend's trying to be broken as we speak right now. So it's trying to do that. And we'll see if that continues this week. I have LABU. This is a 3X bull ETF for bios. So I have calls out to March. So if you look at this, nice, it worked out. I was in them. I bought them on Monday last week, like around 1650 or something like that. They were up big right away. Then I sold one of them. I bought 3. Sold one of them on Wednesday before Powell. Great. It worked out great because had I not, I would have, not been able to take any profits, and then I would have had less leverage to average back in. So then I sold it, and then I bought it back on Thursday or Friday. I forget. I didn't buy the bottom exactly. Maybe I bought Thursday. I bought it on Thursday, did its thing on Friday, finished strong, and now today it's up good. So it's nice. I sold one more. I had it in my Robinhood too. I played it in both portfolios because I like to play a lot. And I had a bunch. I think I had 4 of them in my Robinhood. I think I sold one of those today. So I have 3 left in both portfolios, and we're looking out to March. So I'm looking for a bigger move, ideally. But at this point, I've kind of played around my core size by taking some profits into some of the strength so that, hey, I have the ability to average back in if we do see lower lows. But if we don't, great. I'm locking in gains along the way, and that's it, and let it do its thing. And I free up some capital and free up some cash to add into other things if I see fit, if I want to. Let's see. BW is my favorite company in the GIVO. BW. What's going on? I like, this is another one. BW, if I go back to this guy, Babbitt and Wilcox, this is one that I actually really liked wow, this is actually in a really good spot. I got to put that back on my radar. I traded it, and it was a really nice trade, and it had a really nice run. I like this one a lot. Let me put that back on the list. Back on my swing list. I got a lot of stuff on this list that really, really, this is a quiet stock too. This BW has not been a very popular stock in the past. It generally doesn't get a lot of attention. So I like that. I like when it's just nice and quiet. But this thing hit down to $6 back in September, October. This was my best trade probably for a long time, at least recently, right? In the recent, 3 to 6 month period, because it was like, look at this. It broke the downtrend, pushed up, and then had a crazy extension day. It had some really good news flow too. The thing went from, this 6s to 10 plus, and I thought it could go for more, and it very well could, but now it's back down to a much more really nice, in my opinion, really nice level down here, sub $7. I think it's worth a shot too. You could have got this thing sub 650 on Friday. That's killer. Risk it to the lows, risk it to $6. That's it. So you're playing it here. You got about $1 risk downside from where we're at right now. But I think this thing gets back up to 950, those highs. This is a perfect range to play as well. Literally, this is a perfect range. The stock has been in a rough range. No, it did try to break out, but it was a little bit of a false breakout there. But, buy this thing to as close to 6 as possible, sell it up over 9, and rinse and repeat until you get a breakout of either direction. And that's really it. I like that a lot. Which is good that we reminded. That was a great reminder, because B-dubs is one that I had traded before. And sometimes when you've already got a history with the stock and you've played it before, it's great to come back to, because you kind of know it. You kind of have a feel for it. You kind of know. I know this had some really great news flow over the past couple of months, and I know that they were solid when I originally played them a while back. So you just double check some things, check on their current market cap, check on their last couple of earnings reports, see what's going on. And as long as things kind of check out and things look good to you, then boom, it's a position to be taken. So this is on my list. I'll tell you the ones that I have on my list, high on the list. Now, I think BW is very, very high up there. I would like to pin this one against a couple of names. And a couple of names I'll be looking to pin this against is BW, ELYS. I love a lot as well. It's curling up nicely the past couple of days. And it held up pretty good last week as well, which is good to see. ELYS I like a lot. Also one that I've traded in the past. And then AESE. AESE is just sitting there and it's coiling up. It's actually red today. It's just coiling. So those are 3 on my list that I like a lot on the small cap side of things. So I think those are, I got a lot more where that came from. Those are probably my top 3 on the surface without diving too deep. I would say that I like for some nice moves into the, when small caps heat up. So, realistically, am I going to start buying them right now? Probably not, because I already have other small caps. But if I get a nice run on one of my small caps, I take profits and it has a good time and I exit my position. I no longer, want to be in long anymore. I exit my position. I take some profits off, and then I'll be looking for something like one of those. As long as the market's decently, firmed up in small cap land, looking at one of these as the next one to probably add into and initiate the new small cap, swing trade approach strategy. This is kind of an old strategy that I modeled from an old strategy back in 2019 that worked so well, and the pandemic just threw it for a curveball, because hey, everything just went up, so there was no opportunity to add lower. It was just like everything went straight up. But hey, it's part of the game, adapting to that stuff. So, okay, let's see how SPY is heading up. We got about 38 minutes until the close. So SPY dipped. Look at that dip. Got eaten right up. Volume's coming in too. Look at the volume. Really coming back. It's getting up to close to those, first couple hour, candles. So we'll see if this continues to hold up. Oh yeah, Mesa. Let's say, I'm curious about Mesa. Is it over $5 again? Mesa Air. It's at 5 roughly. We gotta get a bigger move out here on Mesa. It's just kind of sitting back and not doing much. The problem here is it's a small cap and it's tied to the airlines. It's kind of like a subset of an airline, of a couple airline names. But this has potential. We've been talking about too on the streams before. I like this one a lot. I have June. Do I have June calls? I have July. I have July's. I have July calls. July 15th. So I got plenty of time on these. But if we get a big bounce in airlines, this thing went from, again, we talk about this all the time in the past couple of streams, but this thing last year, in a matter of like a month and a half, look at these candlesticks. There was now about 5 weeks in a row, or maybe 6. 1, 2, 3, 4, 5, 6. 6 weeks in a row where this was green every week. And it went from 650 to 1740 in a matter of 6 weeks. Nuts. So yeah, I'm not looking for that type of same thing, but a move back up into the 8 to 10 would be really, really nice. And so that's what I have calls out to July. Not too many. So hey, it's one of those trades where it's it's not too many, but if this does play out how I see, this could be a killer trade. Look at SPY though. Look at this. This is a pretty nice snapback. Dips off, some profit taking that's getting bought up, possibly. Look at that. Whoa, look at that volume, by the way, guys. Look at this. This candlestick, the past 5 minutes, we've got over 3.7 million shares. The opening candle was at 3.8, so we may actually eclipse the open in terms of volume here, and we still got about a half hour to go to the close. Pretty good volume coming in for SPY. Okay, there's that. I want to talk about that. We had to pull up the swing list. Got those pulled up. Talked about a firm earlier. Starbucks. What's Starbucks doing? SBUX. SBUX. What's this guy at? It's kind of held up. Oh yeah, it's holding up. It's just trying to consolidate and possibly setting up for a reversal back up to the 104 area on Starbucks. Yeah, it could come down more too. I don't know. I mean, if the market stays firm, I still think it's probably going to bounce back up into the hundreds. But it was one that I took as a long idea a couple weeks back. But then the market didn't help us out, and it just fell below my support 104, and I cut it. But it was nice. It was nice to the downside if I was thinking that way, which I sometimes you think to yourself too, which is I think kind of stupid to think too. You see a stock that you like or a setup that you like, and you're like, oh well, if this happens, I don't like it anymore on the long side. Well, what about the short side? Why don't you like it on the short side? So it's always a good question to ask yourself is that, hey, if I was in a stock long, now I don't like it long, or I sold it. Like for some of my swings, I think it's a really good idea to think about. Like if I'm in a stock, a small cap penny stock, I'm in it for a swing, I know a good bit about the company, right? So for me to sell it, that means that I think it's overvalued now and it's probably going to come down. So when you get to those points, what about thinking about that downside and trying to take advantage of it a little more often? I think it's definitely worth, it's worth a thought because a lot of people don't think that way and it kind of limits them to a degree, right? Here's Penn. It's actually holding up over this 40. Let's look at the daily chart for Penn. Here's Penn. Penn is, it's building. It's building higher lows. This has that reversal look to me on the daily as well. I think a move back to $50 is very, 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 very imminent on Penn as long as the market cooperates to a degree. So we'll watch that. And SPR, it's a little bit of a pull off the bottom here today. Nothing, some volume actually here on this guy. Decent volume today. Volume is 61,000, but average is a lot higher. Yeah, a lot of these small caps are just dead. Saw not much volume. NVOS, random volume. Just checking through some of my current positions. LABU is, let's see where LABU is at right now. It's up 10% today. It actually hit VWAP and bounced at the VWAP. Very, very nice. on that one. So we'll see. I think this is going to go 25 plus with a sustained market bounce, though. So we'll see how that goes. If this thing goes 25 plus, I'm going to be looking back at the percentages on those options and be like, oh man, if I don't scale out, I'll be looking back and say, what could have been? But we scale out for a reason, right? To limit the downside, obviously. All right, let's go back. I'm going to go to FinViz now and just check out how this is setting up and have these numbers changed. Not too much. All right, so advancers today, 77% of stocks advancing versus just under 20% declining, which is, pretty good. And it's pretty much expected across the board when the market's up to the degree it's at, right? This is what's really cool or really interesting. 50 stocks hit new highs today. 158 hit new lows. So despite the green, still a lot of new lows. SMA is kind of the same as last week or the same as what we talked before. Here's what's also cool to look at too. If we look at this, and I want to see a better, I don't want to say better, but I want to see more across the board. Look at these big names up into the top of the screen and to the left. Like Microsoft, a 6% weight on the S&P, down 0.25 today. So that's something to at least think about, or that's interesting to note. Where most other stuff is green, pretty green. Microsoft being down is a decent weight to the downside, though, on the S&P. So if Microsoft is up like Apple, S&P probably be up almost 1.5%, 2% today. Very, very possible. But across under the surface, everything is pretty, decent amount of mix, but fairly green to even. Not too much red. And across the red, really what's red? Pfizer is decently red. CVS is decently red. Boeing's up a lot. Boeing had a strong day. Got beat down last week, but it's had a strong day today. Airlines are up really nice across the board. I'm curious. LUV. That is Southwest. I haven't looked into Southwest in a while. Let's just take a look at this chart. Southwest had it's up 3.5% or almost 4% today. This is another one of those stocks, to be honest with you guys. I like this one too. This is one that maybe add to that basket. It's held up pretty well, relatively speaking, in the airline space from the past year and a half. But if this gets back up, into the 50s, it's very doable. 25, I think a 25% move isn't out of the question on Southwest in the near term. Longer term, though, if we broaden it out on this guy, longer term, this has been a really good stock over the past since 2012, really since I guess 2009, if you want to go back that far. Since the crash back then or the pullback back then, it's been really good. Really strong and been solid, and I think that we're going to see more of that in the coming years, as long as the market holds up. Alrighty, let's see. I wonder if there are any headlines here. What are the headlines? S&P 500 bounces on a second day as it wraps up the worst month since March 2020. So we're still on pace, I guess, because today is the last day. So I guess we're still on pace for one of the worst months in a while. So I guess finishing strong, right? I guess. IWM, here's small caps, the small cap ETF. Here's this. Let's look at IWM. This is really cool because this is very close to $100. And why I think that's interesting is because this dipped down below that 200. I'm sorry, $200. Sorry. 200 dip below $200, but it's very close to getting back up over 200. And if it gets over 205, look out, because I think if this thing gets over 205 with some strength, we'll be back up into the 225 to 235 range fairly soon. Is this my speculation there, I guess, on IWM. IWC is micro caps. Let's take a look at IWC. IWM is small caps. Technically, AMC is the highest weight in IWM, which is kind of stupid, but whatever, it is what it is. IWC, first dip zone, is where it bounced actually very, very nicely here, and it's up 2.5% today. I can see this thing getting back up into that 150-ish range, honestly, on IWC. Hedging myself with some small cap shorts, took Rivian and Ride short today. Rivian just, at least on Webull, they just recently allowed you to short Rivian, which is kind of good. I liked this. This had enough volatility, honestly, just to short shares. But obviously options are great to play too, I guess. But they only allowed you to play. You couldn't short shares. Now you can short shares on Rivian, which hard to borrow rate is 1.4. I mean, it's cheap enough. Who cares on that? Rivian and Ride. Ride's up a lot. I think that could be a good idea too. Ride as a short, probably plenty of shares available. This could be a good short, for a few percent back down at a minimum, if not more, especially if the market kind of pulls in. By the way, though, we're just talking about the market pulling in. As we speak, it's actually ripping back up. So here's SPY. It's actually looking like it wants to make a shot towards the highs after that little dip to close out the day. It's trying to go back up to those highs. Can we see in the last 30 minutes a $2 move and get to 450 today? That's my next resistance point. So what I'm kind of looking at is tomorrow, maybe we get up to that level tomorrow, and that's my hedge, or at least possible short zone on SPY. But I'm not going to play it before that, because if you were to play a put right now and we go up $2 into the close, you're already down bigger than you need to be. So I would just want to play it as a hedge. Although if I had to say, to be honest with you, I think we're probably going to go higher this week from here than lower, if I had to take a guess. My guess is we probably finish up in the 450s by the end of the week. We'll see. But I would bet I'm more like a 60-40 saying, above or below 450. I'm probably 60% wants to say above and 40% below 450, which is still $2 off to the upside. So a good way to go. A good amount of time, 4 days, to kind of bounce around or even, get higher than that. We'll see though. It's just, to me, it looks like it's just like that melt up in a sense, right? Where if you look at this chart today, just the volatility just hasn't been there compared to last week. It's just been kind of grinding. So let's take a look. I'm curious if we had pulled up. Let's pull up Twitter, and we were talking about, for those who are also or maybe not familiar too, we're talking about. Oh, here he is, David Hunter. He just tweeted. Here we go. So here he is, David Hunter. This is my other account. I guess I should pull the other account. Whatever, it doesn't matter. He tweeted today, the Dow Jones corrected down to its 200-day and is now beginning to run to new highs. Again, let's go back to that though. Here's the Dow. Let's flip the Dow daily chart. Here's the Dow. It pulled below the 200 MA, and he's saying now it's beginning to push back to new highs, which will still be a pretty big move from here. From where we're at right now in the Dow, that's still going to be at least a 6%. It's not that much, 6%. Whatever, who cares? Not a huge move. Head to new highs. Rates are poised here to head lower before they head higher. The 10-year is likely to fall from 180 to 140, 150, and the 30-year from 210 to 180 in the next month. This is bullish for the markets. Generally, yes, it is. But we were talking about him before last week, we've been talking about him for a couple weeks now, because he pretty much called this correction pretty well. And so not saying that, hey, any one person is someone you want to put weight or faith in, but it logically makes sense. And I'll kind of just briefly talk about what he's been saying. He's been saying he's got plenty of experience. He makes these forecasts macro level. He's not a short-term trader by any means. So what he's been saying is that we could see a melt up, and we probably are very close to a melt up, and if we are already beginning the melt up phase, which is right here. He believes we're going to see a historic run in the stock market. S&P to 6,000, which, by the way, we're at like 45. What are we like? Almost at 4,500. We're below 4,500 on the S&P. So that's a big move. NASDAQ to 20K. We're roughly like 14K on the NASDAQ. So NASDAQ from 14 now to 20K. The Dow to 45,000 and the Russell to 3,000. So pretty crazy run, right? Like 30+% run on the major indices. Individual stocks, picture some of those moves, right, in that run. And then he believes a 70 to 80% correction or crash second half of the year. Now, it's worth noting because this is what we kind of, at least today is just one day out of the big bunch, right? But it just feels like the melt up is happening in front of our eyes in terms of just things that are grinding higher. We're not seeing crazy ups and downs and massive runs and this and that. We're kind of just seeing a pretty steady run and dips getting bought up. So that perfect example right here of this dip that we saw of those who maybe were looking at puts. We got to correct. We'll pull back today. We'll have a knife down. We never got it. There was your little pullback, and it was bought up very fast, and we're back at highs. So this is kind of showing you that melt up that we've been talking about as it's something that it's when people aren't really expecting it to go up, it kind of just melts up. Is kind of the terminology in a sense. And when everyone's hedged with puts, it's the perfect recipe to keep going higher because everyone thinks it's going to be the doomsday. Everyone thinks it's over. We're crashing. We're this. We're that. We're going to do this, and it's just bleeding out puts. And when that crash or that next big bust correction that he thinks is going to happen in the second half of this year, roughly, who knows, maybe next year, whatever. He believes that that will come on a parabolic move. And it makes a lot of sense, at least to me, right? I can't see a crash on a time when everyone's buying puts. It's probably not going to happen. Everyone's buying puts. How can everybody win? They can't. So when everyone's buying calls, when everyone's over leveraged long on margin and this and that and feeling really, really good, that's when it makes more sense that we can see a legitimate 75%, 80% correction or crash. Those numbers are wild. I don't care about those numbers. No, by no means is that target wise what I'd be looking at. No, just see how things play out, see what happens over the coming weeks and months. But if we start breaking out to new highs and the S&P and SPY goes to 500 plus, it's probably not a bad idea to either have a hedge on or to start to thin out of longs. Because again, we step back and look at SPY over the past couple of years and look at this chart. I mean, we look at the chart over the past couple of years. It's insane. You go back, the left of this chart is 2012 down here. And to the top, I guess, of our chart right now is where we're at right now. So if you go back, there are some nice runs. Like these are some nice grinds. Like this is a nice little kind of, grind period of time from 2012 through 2015 where the market went up on a nice pace and did its thing, right? But the slope of these lines from that slope we just saw to the slope that we're looking at from the pandemic lows is absolutely ridiculous. So the slope is extending massively. And to finish out this bull parabolic run, generally speaking, that backside is going to come very, very fast, come very, very hard, but it's going to come when everyone least expects it. So that's what I'm looking at, and I don't care. I'm kind of looking at like 500 on the S&P. If in the next couple of months, if we bounce back up and go to 500 plus and start going parabolic, that's where I'll probably be a lot heavier cash. I'm going to be holding a lot less trades. It's going to be a lot, a pretty, thinned out portfolio and just take advantage of what I see, day to day, week to week, and not be over leveraged by any means. Be, pretty much half cash or even more at that time is what I'd be looking at, just because you take money off into these extensions and then just hedge yourself for the downside. Or if you don't want to hedge yourself, then don't. Just hold cash. And if you see opportunities, wait for the opportunities. Because this pullback as of late, I think, has only showed us or only kind of taught us that, hey, these parabolic runs, they end. They may take a little bit longer than you may think. So shorting it into the top is a little risky, but they end at some point. And when they end, a lot of these these bounce back trades are really, really profitable. And so these are some better opportunities. And just as long as you have the patience to kind of handle it. So we'll see how it plays out. AMC's been real quiet. What do you think of PTPI? Let's take a look. I'll pull up AMC and then PTPI. I think I was noticing PTPI a couple days ago. AMC is just holding the VWAP all day pretty much. But yeah, it has. And it's kind of I don't want to say a good thing, but it is a good thing because here's what's happening, right? You kind of have a lot of people who are in this thing who realistically made a lot of money very, very fast and beat hedge funds returns in a very short period of time for last year and whatnot, or this past year, right? And now the backside is here. And maybe it took a lot longer than some may have thought, but the backside is here. And now we're below the original spike. So AMC's original spike was back here and around this time last year. And AMC went from like the 1s, 2s, 3s, and 4s up to 20. And now we're back at 15, 16. So now we're back to a level that, hey, AMC is back below those highs. And so, it's come back to reality. And so the reality is setting in for a lot of these short squeeze stocks. And the reality is setting in for a lot of retail traders who are back at working at, wherever. And then the easy money is no longer there. So it's a good thing for the market because in a bad thing, right? It's a bad thing because I think a lot of people are going to get burned and lost a lot of money because they had, diamond hands, and hey, you learn your lesson and it is what it is. But at the end of the day, a lot of people made some money and maybe it changed a lot of lives for the better and now maybe some for the worse, unfortunately, but it is part of the game. That's part of the stock market. And it definitely changed, I think, a lot of people's views on stuff. And I think it's a good thing overall for for retail traders in the future. And it definitely brought in a lot of retail traders now that are definitely still here and that have the interest and maybe piqued their interest. Maybe you lost money on this whole, this past year and a half, or you lost money in general. And you're like, well, you know what? It got you interested into investing. And now you're kind of making, taking a much more, smart or, a less risky approach to your investing. You're thinking about your future more, and it could be a good thing for those who really kind of took away the good. The people who are going to cry about it and who are going to complain, and just in general, any market conditions, I think is how it is. Realistically, if you're going to be one to cry, complain, or say, yeah, it's the hedge funds, this and that, I understand the concern and the problem, but at the end of the day, it is what it is. And you can either do something about it, learn from the mistakes, or you can cry about it. So it's like, I see that as these all are great learning opportunities. And really, we've been seeing unprecedented stuff happen in the markets. And it's great because you're going to go through periods of time where the markets get really quiet and nothing happens, it feels like, and it's just boring. And then you'll be ready for the times when we start noticing things like this happening again. Well, you have that experience. You'll know what happened last time. And so you're going to have a better feel and you may be able to take advantage of it better. I know for me personally, if I ever see a small cap market as hot as it was this time last year, I'm not saying I'm going to go full port into some trades. No, that is not a good, risk management approach, right? But I'll be a lot heavier. I'll be a lot more nimble. I'll be looking to day trade more because there was opportunity every single day. Because again, then you go through times like the past 6 months where it's just bleed out, right? And then again, on that same note, we see parabolic moves like we did. Then I'm going to be much more, seasoned to take advantage of the short side or the back side of these trades, of these moves. And so there's money to be made on both sides. But having that experience now of some of these crazy moves up and then down, that gives you the ability to then do that when we see it again. But, obviously, if you don't have that experience and you weren't sitting through it, you weren't learning through that, or you didn't have that experience in general, right? Then you can't take a better advantage when it happens again. So that's what I think is really important. And hopefully that's people got out of that whole kind of the past year and a half, really, of AMC stuff. PTPI, let's take a look at it. PTPI. How is it today? Up 6%. 6%. This is one, I don't know. It's back down to the lows. It's actually kind of honestly in a good spot. If this holds, these lows kind of hold up in the 140-ish area. I kind of like that risk reward. It was a prior runner, right? It ran the past a few weeks ago, short squeeze and whatnot. So I kind of like it as long as it doesn't drop below, let's say, Friday's low of 145. So give yourself a risk parameter down to that level because you don't want to be holding a bag if this thing does fall off and drops down to $1 and then down to 85 cents. And, it's not worth it unless, fundamentally you have a reason to hold it. But just chart-wise, just be careful on that. If you do decide to hold that thing below these lows, just know your risk down lower than that. It could be pretty nasty and it could go quiet for a long time, especially after some crazy runs. Because these stocks aren't going to always just sit up this high forever. Sit up that high forever, or even where it's at now. A lot of these small caps, people realize, here's the thing, that there's a lot of, and it could be a longer term, thing as well, that a lot of the risk off approach, what that really means is companies with no revenue, companies with no sales, companies with no product, right? There's a risk. Companies like that have a massive risk to investors and traders because they're probably the ones that need to raise capital, do offerings, dilute shareholders, and all that good stuff, right? All that fun stuff, I guess, or not fun stuff if you're in. But it's like, why would I bother, holding that or trading that when I could hold like an Apple or, hold a different stock that isn't at risk of that, right? And the problem with these stocks, the lower they go, the less volume there is, the worse it could be. Because then there's no opportunity for you to raise funds, to raise capital, or to dilute shares, or to offer more shares for the public, right? If no one's going to buy that, then how do you do it? So that's the biggest downside. That's one of the downsides of these things, is if this goes on, this is a prolonged sell-off, you're going to see left and right, one by one, bankruptcies, delistings, all that stuff is going to be happening. So, because these companies, they rely on the shareholders and they rely on traders to trade them up and whatnot, and people to hope and pray for them to be the next, Amazon, the next Apple, the next this, that, whatever, right? They rely on that hope and that, attention, those runs for them to be funded to continue their trials, to continue their product research, and to continue all this stuff. Some make it, but most don't in the long run. So when you're playing small caps, you have to understand that. Is crypto a scam? I honestly... Crypto a scam. Personally, I am definitely not the person to go to when it comes to crypto, although I do hold Bitcoin, Ethereum. That's it. I hold Bitcoin, I hold Ethereum, I hold a little bit of Solana. I think that is about it. I hold it long, and I really would love to start buying crypto under 30K. I would love it. Under 20K would be amazing if we get that, but I don't know. If the market stays strong, I don't think we're going to get that. We would need, that what we were talking about before, right? The David Hunter bust type of thing. We would need that for if that happens. If we had a bust and the S&P went down 80%, which I think is far fetched, but hey, who knows? I don't know. What do I know, right? If that happened, then crypto. What do you think crypto goes down? Crypto's probably going down 90%, if not more, honestly. Who knows? Maybe not. Maybe then at that point, there would be a reason to think about, if the banks fail and the U.S., who knows? Maybe things fail and everyone goes, wait a second, crypto is actually the solution. And it's a whole spin and it bounces back and goes crazy. But on the initial, panic, anything speculative, everything is getting sold off. Everyone's liquidating, everyone's pulling cash, and everyone's going to be holding cash. And, I can see crypto going down a lot further. I hope that doesn't happen, but I wouldn't be surprised if we did get something like that. This thing just comes down a lot. And that's what I'm I don't want to say hoping and hedging. I'm not hedging for it. I'm not short crypto. I have it long. I don't have that much. I would love to get more. I really would. But I would like it a lot lower personally. And when there's a lot more people, crying about it essentially. When there's a lot more fear, when you got people like, what's that guy's? I heard that guy's name. He's super negative on crypto. I forget the guy's name. One of those big guys. He's got a big following, big YouTube channel, I think. He gets on CNBC sometimes. They'll interview him, whatever. He's like super negative on crypto. I think it's got, no value. When he's like at the forefront, when they are interviewing him on CNBC, when he's like all over the news and talking about how Bitcoin's worthless and this and that, that's when you want to start buying it or buying more. Not when it dips 2%, right? Because it could dip a lot more than 2%. That is that. Okay, S&P, look at this. We're hitting highs. We are about $1 away from that 450 magnet. We may hit that today. I have SPY calls. Let's take a look at those. I have 500 calls out to June, which I only have 3, but these are they're kind of just a lottery ticket almost in a sense. I don't like using that terminology. I don't, but I have an average at 177, and now they're at like 258, which is pretty cool. Market keeps going higher. I mean, I'm looking to take one of these off over $3 ideally, and then hold 2, and then maybe take another one off at 5 if we get that. We may not get it. At this point, though, I'm not going to hold this. I'm stopping out at break even. So if this comes back down sub 2 and it kind of gets weak and the S&P starts to fall off, I'll take these off, lock in my couple dollars of gains, just so we don't go red, and then I can reassess and re-enter if I wanted to later on. But that's personally how I'm probably going to play that going forward. Either we kind of keep going from here, and that's great. By the way, though, as I said that, we are literally continuing to go. We may hit that 450. We have 10 minutes to go to the close. We're 50 cents away on SPY. We may hit 450 today. That's a spot, to be honest with you. I kind of like puts. The problem is that we're closing very, very strong, which is generally a good signal for the next day in terms of strength. I don't know. But if we were to gap up tomorrow and we popped up into, let's say, the 455 range, that's a spot to potentially, I would be looking at a little hedge or looking for at least a short-term pullback with puts tomorrow, possibly. Maybe Wednesday or Thursday, who knows. But I would prefer, I don't want to hold one overnight, a put like that. Just my preference. It's a good hedge. Wouldn't be a terrible idea, but I would rather play a day trade or a rejection off of a key area. So if we hit this 450 like 3 hours ago, that's where I would like to play for puts and then take advantage of a pullback, and then that's it, lock in gains and move on. Now that we're coming up and we're closing roughly at a resistance point, yeah, it's generally good risk reward for a pullback, but because we're closing at it, going into the overnight with strength, and a lot of people had puts last week, we could see a continue melt up and squeeze out the rest of this week. So I'm going to leave it be. By the way, I'm going to look at my LABUs because these are looking juicy. We're up at 9. We hit new highs. I have 3 $20 calls for March, and then I also have 3 $17 calls for March in my Robinhood portfolio. The Robinhood's up nice today, man. It's like $800, which from like a $2,000 account roughly or whatever I have in it. It's pretty. That's pretty nice. Okay, MVIS. This is the one that just popped on the top gainer list, by the way. Look at this, MVIS. Look at that guy. Nice and quiet on the bounce back trade there. we'll see if this continues to hold up. I would love it if it does. If these things can continue to keep going this week, it'd be great for a solid week of trend, of just trend, and boom. Let's see. RMO. Anything else on this top gainer list that I'm noticing? Not really. Kala, CALA is looking strong into the close. Oh wow, that's a pretty big extension right there. Yeah, that's nice. This is a biotech, right? CALA. Let's take a look at I'm looking at FinViz really quick on this guy. Kala, CALA. So what are we at? We're at a 65 million float. We have a 30 million market cap. Price of sales of 3.3. Cash per share of 1.15, which is good because look at this. That's like roughly 2 to 3x cash over market cap. I mean, in terms of the stock, you're talking about a company that holds, over $75 million in cash, but their market cap is 30 million. Seems like a pretty nice mismatch, at least risk reward to me, and it's up nice today. It's up 66%. So if you again, I have some of these that I've been looking at, and I don't like buying them after the big runs. Find them early, and yeah, you might go down 10, 15, 20% initially, but if you get a 60 to 70% bounce back on some of these things, yeah, it's pretty massive in terms of that. So if you got to just play the small caps, the bios especially, with a pretty long leash. I know people don't like to do that. I have a different, risk approach to that, so I'm fine with it. But they're risky for sure. Let's take a look at SPY. We're actually very, very close on SPY to hitting new highs of the day. 450 is the target that I had leveled out here, for weeks. I think it was the downside target. We hit that pretty quick, and then now we went way below that. But now we're back to the upside. That'll be the resistance point. So we hit 449.76 so far, and we have about 5 minutes left, or just over 5 minutes or so into the close. We'll see if we can get that 450. By the way, here's the daily chart on SPY. Broke out of last week's range with authority, with momentum, and we're closing at the high of the day. As long as we wow. As I did that, boom, we just blasted through 450. 450.18. We're going to probably close over 450. On SPY, which is pretty crazy. Absolutely killer. But yeah, back to the daily chart on that. Here's the 1 day. Each of these candles is now 1 day. So honestly, held last week's top of the range today as the lows. We held up in that top of the range as the lows, and then 440 or so, and then boom, bounced of $10. So the range is still there. I mean, $10 range. It didn't look like it at one point earlier today. But $10 range, man, we still got it. We still got that range on the S&P. And now it looks like after 450, I like 455 and then 462. Lines up pretty close with the 50 SMA. So those are my next levels I'm looking at. But as crazy as it sounds, if we had a trend week where SPY trends, we could be within, earshot of all-time highs by the end of this week. If the trend holds, it will be, fairly wild, but it would be crazy to expect, but it wouldn't surprise me, to be honest with you guys, one bit if we finished up near 460 and we ended up, if we're near 460, we're $20 off all-time highs. From 460, let's just do the math, to all-time highs, you're about 5%, a little bit less than 5, about 4.5% away. So, you're right there. From here, though, from where we are right now, roughly, we're like just about 6.5% away from all-time highs. A good bit to go. Let's take a look at QQQ. I'm looking at the NASDAQ in a second, too. QQQ is a little bit further off, but a big bounce, up 3% today. QQQ back to all-time highs would be about a 12% move from here. So a lot further to go for QQQ. And then the NASDAQ is up here over 14,000 again now. The NASDAQ to get to all-time highs, roughly the same thing, about 13 to 14% to get to all-time highs in the NASDAQ. So big moves would be needed there. Then again, wouldn't put it past, right? The market at this pace, this current rate we're seeing, which is pretty wild. I would be looking at a possible gap up tomorrow and then a possible pullback into that range. So maybe a gap up towards that 455 and then a pullback to 450, fill the gap back down, and then a bounce is kind of my possible speculation for tomorrow, because we're closing very, very strong. We'll see what happens. So I expect a lot of the futures and whatnot to be a little bit less volatile. Like last week, we would close strong, and then next thing you know, you look at futures 2 hours later, and they're down 2% off of the highs, and then you wake up the next day and it's green. It's like, I don't think we're going to see that type of action, but we're seeing some wild action for sure. What's going on, James? I'm the lives too. For those who are new, all I ask is we hit a thumbs up. We don't have a Patreon on that jazz, and I think here's another thing I was thinking about too. I'm not sure people think about this. For those who have Patreons and whatnot, a lot of people who do that stuff and who are upping prices because they're losing money in the stock market. Sorry, but people who are doing that stuff, I was thinking if I ever did, right? Not that I intend to do that, because I like just doing the streams. They're more fun for free, and it's just, I think it's fun. People have different opinions on that stuff, whatever. Okay, cool. But if I ever did something like that, or had a service that I charged for, and I was a profitable day trader, like for example, if you're looking at someone who you're paying for like alerts or for their day trading Discord, whatever, right? I would put it as, I would say, pay what you want. It's kind of my idea. I don't care. You got to pay something, but pay what you want. If you want to pay a dollar a month, pay $1 a month. I don't care. If you want to pay $100, you want to pay $500 a month, pay it. Like, that's how I would do it. Personally, it's literally up to you. Maybe like a $1 minimum, I guess, whatever. But like, it's up to you, and that's how I would do it. Because if you're already making money, you don't need this. This is just extra money on the side, right? But I guess for your time, and it's a business for a lot of people too. But so in the meantime, all I ask is for a thumbs up on the videos. And if you're interested in subscribing, we go live Monday, Wednesday, Friday, and then Sunday nights. This week we probably won't go live Sunday night. We might. We'll see. Actually, we might. We very well might. I'll be in Montana, but I'm gonna try to do it from my laptop, from the hotel. We'll see. We'll see if we can do it. But those are the lives, and then I try to post videos when I can in between that. And then Saturdays we always do a portfolio update. So those are fun to kind of follow along, see what I'm thinking about. And I'm thinking, portfolio-wise, is eventually the Webull portfolio is probably going to go more cash to be more of an active trade, day trade portfolio. And then I'm probably going to we'll maybe pull that into those videos, those weekly or monthly updates in terms of the trading stocks to $100,000 series. We'll kind of pool everything together. We'll have a dividend portfolio. We'll have a long term. We'll have the IRA. We'll have a bunch of stuff. We'll have the Webull, and we'll kind of pull all those numbers together, see kind of what's going on in each portfolio, where at least I'm positioning, and all that good stuff. And just people can see what's going on. I think it's cool. And that's it. So we ended up closing just under 450 on SPY. So we got a little, we're like right at resistance. 449.77, up 1.77% on the S&P. The NASDAQ closed the day up here over 3.4%. Pretty crazy day on the NASDAQ. Here's how that finished up. Very, very strong on the NASDAQ. The Dow closed up over 1.1%, 1.13% to be exact on the DIA, the Dow ETF. Pretty strong day across the board. Really nice action. Small caps, we saw some good bottom bouncers, some good lift off the bottom. I know I'm looking at my portfolio, my side of the screen, all my small caps. I got a 5% up day, no news, very low volume, but a floating higher. I got a 9% up. I got a 10%. And I got two 10% on that front. So that's cool to see. That's good stuff right there. Overall market-wise, let's take a look at the overall market right here. We have about 80% of advancers versus about 17% decliners. 162 stocks hit new lows. 162 hit new lows and 51 hit new highs. Pretty crazy, but my speculation on that is simply because a lot of stocks are towards their lows relative to their highs. So, on some small caps or a quick wick down, a quick sell, a market sell at the open or whatever could have triggered a lot of those stocks to hit new lows. And a lot less are near their highs, so we're seeing that. So we're kind of making our way through there. Still most stocks below the 50 SMA and below the 200 SMA, so below those momentum indicators, a lot of stocks are hanging out way below. Microsoft closed green. That was red earlier. Now that closed green. So a lot of the big name tech up nice. Tesla up over 10% today. Apple up over 2%. Facebook, Meta, by the way, they just bought, or I guess they signed a lease, or they're renting out the massive building that's being put up like a block and a half away from me. 30 floors, like the whole bottom 30 floors is all gonna be Meta, Facebook. That's gonna be kind of cool, and see all the Facebook people just walking around walking around downtown next door. But that's cool. But that was today in the market. So hopefully those of you guys enjoyed. If you guys want to come back for more future lives, hit the thumbs up button, consider subscribing to the channel. We post, we're going live Monday, Wednesday, Friday, towards the end of the day, towards the close. And then Sunday nights we go live before the week starts, talk about what we're looking at, futures, all that good stuff. And maybe at one point this year, we might go to just lives and that's it. No videos. Who knows? We'll see. We'll see how things go. Thanks so much for watching. Thumbs up button, and I will see you guys in a few.